For the first time, up until the end of 2005 or so, we didn't have any net silver investment at all for decades. People were basically just hoarding silver since 1980. So we had no net investment at all in silver up through the year 2005. The next year, they introduced the silver ETF. Other ETFs came out afterwards. And basically, we went from the public or the investing world being net sellers of silver for decades up through 2005, that for the last 3 years, we've flipped the switch, and the world has become a net investment buyers of silver. And in a dramatic way, as I pointed out recently, this year, something like $2.5 billion has so far been bought in various forms of silver that we can document, probably more than that if you let your imagination run wild. But we can prove that $2.5 billion went into silver. What's so remarkable about it is that a few years ago, there was zero. So gold is still bigger. Gold has more investment coming into it, given its price mainly, and but it's not as much more than silver is, and gold has always been, people have always invested in gold for hundreds of years. Certainly for the last 50 or 60 years, there's been net investment into gold. The big difference is that silver went from disinvestment, selling, up until 2005, and basically it's more dramatic in silver because we went from this net seller to net buyer switch just about 3 years ago, and that's dramatic. That's a turnabout that you want to put into historical perspective. You couple that with the fact that we have such little silver remaining in the world due to the industrial consumption of the last 100 years or so, and you got the potential of an awful lot of money chasing a very small amount of material, and that combination, generally speaking, it can be very explosive to the price. Everybody trying to buy something that there's not much of that exists in the first place, and it's a very exciting possibility, and it all seems to be coming into play.
Ted, you've talked for years about, eventually a default on the COMEX, and I don't want to put words in your mouth here, but I have people calling me now and asking me, should they take delivery of their 1,000-ounce bars on the contract side with the COMEX, and I'm telling them to do so. Now, there will be, to resell those, there may be an issue. They may have to be assayed or this, that, or the other. But people can go in right now, buy silver in the nines, and they have to do it, 5,000 ounces at a time, or they have some mini contracts. And I'm hearing on the COMEX side, if you're doing smaller deliveries, they're not giving people a hard time. But any large numbers, and they're giving people a hard time and wanting to know what the deal is. Have you heard anything on that? And what does that say? Meaning, because the silver market is so tiny that 1 billionaire of the metal that's out there could, and you can't do this because you can't take delivery off the COMEX, but somebody could cut a check and just wipe out inventory, theoretically, were it not for the problems of the limitations on delivery, right, Ted?
Well, you don't want to put words in my mouth. Look, default, I've been writing about the potential of default in COMEX for many years, and I will say that if the price does not escalate rapidly and dramatically, default becomes a real probability, if not a possibility. You have to remember, you don't want to be irresponsible about this. Default, a contract delivery default is perhaps the most serious thing that could befall any exchange. So it's not something that you want to toss around the words lightly or as if they don't have meaning. It has serious meaning. It is probably the most serious thing that could happen to the exchange. It's probably the most serious thing that could happen to the regulators in this case, because there has been so much warning of this, because we've been setting up for this. At the same time, at this point, I don't think that a default is a sure thing. I said before, just to preface it, it's a probability unless prices go up, okay? But I think prices will go up, and I think that's the one thing that will prevent a default, is that there has to be a price solution here. In order for there not to be a default, you have to get the price up to a free market level in which people would not be so inclined to take delivery, and other people who own silver would be more inclined, by virtue of an attractive price, of making delivery. We don't have that now. we have too low of a price, in my opinion, and that is what is fostering the default talk, which has become commonplace. It's kind of dramatic and noteworthy how commonplace it has become. But the problem is the low price. If the price were not so low, this would not be a problem. So the solution is easy. Let the price go where it should go, break the manipulation, and I think all these things are coming into play. As far as the COMEX discouraging or limiting delivery, that's not quite true. I hear a lot of talk that way, but they do have something like a 1,500 contract per delivery month limitation that any one entity can take, but that's still like 80 or 90 million ounces a year. If you took 7.5 million ounces, 1,500 contracts would be the equivalent of 7.5 million ounces. If you took 7.5 million ounces delivery for a full year, you got a big chunk of silver. So I don't view that as an artificial restriction for delivery. They should have some kind of limit in any physical commodity. I mean, you shouldn't let somebody come in, just like the shorts should not have been allowed to manipulate prices by selling too much. On the other hand, you don't want somebody to just come in to intentionally disrupt the price by buying, too much, artificially driving the price high. That's not right either. So I don't think there are any restrictions. I think what happens more times than not is somebody will call their broker or a broker with the idea of taking delivery of COMEX silver. Because it's done so infrequently, nobody has any working knowledge of it, so there's a natural human tendency, and there's no big commissions in it for the brokers. I'm not saying this mean-spirited, but there's no real incentive to make an implicated transaction that involves a lot of extra work for the broker, something he's never done before. He's got to talk to people, get something complicated done. He's not interested in doing that, and I think that gets translated back to those people that inquire about it as the COMEX doesn't want you to take delivery of something. I don't think I've never had any problem, and I've done it for 25 years. If you know what you're doing, it's not a problem. If you don't know what you're doing, problems can arise. I don't deny, however, that there may be some jawboning behind the scenes if a large delivery order comes in, but I don't have any specific knowledge of that. I imagine it's done because it's in the exchanges and in the regulators' bag of tricks. Jawboning is to talk people out of positions, is a time-honored and publicly acknowledged tool in their arsenal, and it's not necessarily evil in itself. But the important point here is that if there is not enough silver to go around, as would appear to be the case, it's going to be reflected in deliveries. It's going to be starting to be reflected now. Anybody who's studied the current October contract of the COMEX can see that there's been persistent buying for the purpose of taking delivery. A few days later, after the contracts are delivered, they're in turn taking the silver out. So there are some subtle signs that are becoming obvious that people are rushing to the COMEX to take delivery, and that makes sense because the price is so low. It offers the cheapest price for silver in the world. It's logical and economic that people would do such. As far as your question about encouraging people to do so, yeah, I think you should. In fact, I'd go one step further. The people that have asked me about it, my advice would be for economic and also for tax reasons, without getting involved in it right now. If you're going to do something like that, everybody seems to be eyeing the December contract as perhaps the line of demarcation for default or something, and I don't have any knowledge about that. Every contract delivery is as good a prospect for big deliveries as any other month. But I would advise people, if you're going to do it, it's probably in your best interest to do it now. Don't wait for December. Do it in the October contract. You still got another week or so to run. You can't make the October contract. I would do it in the November contract. These are not normal trading months for COMEX silver. December is a normal delivery month, but you can still do it, especially for smaller quantities. There's nothing wrong with doing it and doing it now. So I'm in agreement.